Hello, class. This is to practice the adjusting entries that you're learning in chapter 3. I've pulled up the first set of practice questions, and I'm just going to work through some of them with you. So on the first question, depreciation on the company's equipment for 2017 is computed to be $16,000. All right, so let's look at how we would do that journal entry. Actually, I don't even need... All right, so for this one, do you remember what the two accounts are? This is not working the way it normally does. All right, so the first account that we use here is depreciation expense. And then the other account is accumulated depreciation. Now we don't have to calculate anything because they already gave us how much the depreciation is. So are we increasing or decreasing depreciation expense? We're increasing it. What about accumulated depreciation? Do you remember what kind of account accumulated depreciation is? It's called a contra asset. So remember, that means that it has the opposite balance of an asset. So we increase that. So this is an expense, and we just said this is a contra asset. If I increase an expense, do I debit it or credit it? Debit. If I increase a contra asset, do I debit it or credit it? So here's what you want to think. You can look at this two ways. You can say if I increase an asset, I debit it, so I credit this. Or you can say, I know that if I increase an expense, I debit it. So the other one has to be a credit. So we're going to debit depreciation expense, and we're going to credit accumulated depreciation. And the nice thing is that's always what you do. So we'll do depreciation expense for $16,000 and accumulated depreciation for $16,000. We'll record the entry. Okay, prepaid insurance account had a $5,000 debit balance. So the first thing that we're going to do is we're going to look at the T account for that. So we have prepaid insurance. And we started with a debit balance of $5,000. Before any adjusting entries. An analysis of the company's insurance policies showed that 740 of unexpired insurance remains. So what we know is we have a balance in the account at the end of the period of 740. So now the question is, if I started with 5,000 and now I have 740, how did I get there? And I have to record a 4260 as a credit. So if I start with the $5,000 debit and I credit 4,260, I have 740 left. So what does this $4,260 represent? If this is prepaid insurance, what does this represent? It represents insurance expense. So my two accounts are insurance expense and prepaid insurance. If I increase an expense, do I debit it or credit it? So I'm going to debit the expense and I'm going to credit prepaid insurance. So I'm going to debit insurance expense and credit prepaid insurance. So insurance expense for, what did I say, 4620? 4260, 5,000 minus 740, 4260. And I'm going to credit prepaid insurance. Okay, when we do this, if you look on the income statement, we'll see insurance expense. And if you look on the balance sheet, you'll have that $740 remaining in prepaid insurance. All right, office supplies account had a $570 debit balance. So we'll look at our T account on December 31st, 2016. I may need more room. All right, so we had a debit balance at the end of the last year, the beginning of the year, of $570. During the year, we purchased $2,680. It's an asset, so when we increase it, we debit it. At the end of this year, we see that we have $673 worth left in our insurance, our office supplies account. So we started the year with 570 and we purchased 2,680. So that's 3,250. We have 673 left. So how do I get to the 673? I'm going to credit the account 2,577. 2,577. Now, what does this $2,577 represent? Supplies used or supplies expense. So I'm going to debit supplies expense and credit office supplies. So I'm going to debit supplies expense to increase it and credit supplies for $2,577. One-fifth of the work related to $10,000 received in advance was performed this period. Okay, so for this, we have to think about what happened in the past. So what happened first? So first, we received cash of $10,000. And what did we record? What is that we if we received cash in advance, what is that called? Unearned revenue. So first, we received cash of $10,000 and we recorded unearned revenue of $10,000. So we have unearned revenue which is a liability because we owe something with the $10,000 balance. We've performed 1/5 of that work. So we performed the equivalent of $2,000 worth. But we haven't recorded any revenue yet. So we need to record revenue. So we know that we have revenue and we have unearned revenue. Did revenue increase or decrease? It increased. What about our liability? Did our liability increase or decrease? It decreased. If I increase revenue, do I debit it or credit it? I credit it. If I decrease a liability, do I debit it or credit it? I'm going to debit it. And I can see that up here too, because to make it lower, this is what I'm doing with my journal entry. So now on the financial statements, I'm going to have $8,000 in my liability account on my balance sheet, and I'm going to have $2,000 more of revenue on my income statement. So I'm going to record revenue. Let's see, I'm going to reduce unearned revenue. And I'm going to record revenue. Number 5, our prepaid insurance account. So let's look, we have prepaid insurance. Set up our T account so we can see what's happening. Prepaid insurance account had a $5,300 debit balance. Prepaid insurance is an asset because we have a future benefit. We have the future benefit of using the insurance. An analysis of the insurance policy showed that 4560 had expired. Okay, so we have to be really careful here to pay attention to what it says. This is expired. That means it was used, not left over, it's used. So that goes here. That's our entry. The part that was used is our expense. Now, if we were looking all the way through, if we started with 5,300 and we used 4,560, then we have a balance of 740. That's going to be on our balance sheet. And this is going to be on our income statement. All right, so let's look at our journal entry. We have 2 accounts. We have insurance expense and prepaid insurance. Did insurance expense increase or decrease? It increased. And prepaid insurance decreased. Insurance expense is an expense. Prepaid insurance is what type of account? I just said it's an asset. If I increase an expense, do I debit it or credit it? Debit. If I decrease an asset, do I debit it or credit it? The other way to know this is that's what you just did here. So I'm going to debit insurance expense and credit prepaid insurance for 4,560. I'm going to debit insurance expense and credit prepaid insurance for 4,560. All right, last but not least, wages expense of $3,000 have been incurred but not paid. So we've incurred an expense, but we haven't recorded it. What 2 accounts are affected? Wages expense, and what's our other account going to be? If we have an expense and we don't pay it right now, what are we going to record? We have an expense, but we don't pay it right now, what do we record? It's a liability. We're going to record wages payable. Wages payable. Did our expense increase or decrease? It increased. We have more now than before. What about wages payable? Did our liability increase or decrease? It also increased. What type of account is wages expense? It's an expense and it's part of equity. What type of account is wages payable? we owe something. It's a liability. If I increase an expense, do I debit it or credit it? If I increase an expense, I debit it. If I increase a liability, do I debit it or credit it? If I increase a liability, I'm going to credit it. So I'm going to debit wages expense and credit wages payable. I'm going to debit wages expense for $3,000 and credit wages payable for $3,000. And there we go. All right, this one is the same. All right, I'll come back and do another video with preparing the financial statements.